What's good, everybody? What's good? What up? What up? Good afternoon, good evening, depending on what part of the country you're in right now. What's up, everybody? I'm going to give it a few seconds, nothing major, before I get right into it. But as I wait for you guys to come in, be sure to like, comment, share, subscribe, all that good stuff. I'm really happy to have you guys here with me. Also, let me do my usual intro that I tend to forget from time to time. Hi, everybody. This is Tamaya Robles. I am your credit expert. I am the owner of my company, Fix My Credit Now, a50.com. I am the host of my podcast, Coast to Coast Credit. I am also NAREB High Desert Chapter President out here in Victorville, California. Welcome to my channel. That's for all my newbies, too. That's for all my newbies. But yeah, today is going to be interesting. Today, we're going to go over a lot of articles. We're going to go over, not a lot, but we're going to go over some articles. If I can find any video clippings of the topic at hand, okay, I will. But for the most part, I've been looking at articles. You see the title, you know what it is. It's crazy out here in these credit streets. It's just been a wild ride. I told y'all I'm going to keep my ear to the streets, everything, and let y'all know what's good. And this is something that was brought to my attention. So let's get into it. Before I totally start, let me be clear. I'm not a mortgage lender, broker, none of that. I'm a credit expert. I work very closely with real estate agents. I work very closely with people in the real estate industry. I work very closely with lenders, brokers, what have you. I work closely with them because I'm the credit person. That's it. That's all. But because our industries are so close and mushed together, it would only make sense for me to educate myself and learn any changes that's going on because it affects you as my potential clients. It affects my current clients. It affects me as well because I'm also a consumer. So just know that. But anyway, I want to make it clear. So if you have any questions, per like additional questions as far as mortgage is concerned, don't worry. I a lot of people in my chapter, they're in the real estate industry. I'll probably have them on to answer some questions. We're affiliated with a lot of with several lenders. They can hop on. You can ask the questions, and then you can also leave comments. So leave your comments. All right. But when it comes to credit, I got you. I'm here. This is my area of expertise. But anywho, so if you don't know, Fannie Mae and Freddie Mac, it's been brought to my attention that they are now going to start using the FICO 10 and the FICO 10T credit score. If you don't know what that is, I'm not going to go into a huge explanation about that because I did a whole long video podcast about that. I'll bring it up again so you guys can see it. I'll link it or whatever. It will be in the description. But just briefly, the credit scoring models with FICO and VantageScore there's various different ones and they're used for different things. You have a FICO credit scoring model for if you want a credit card. You have another one for if you're trying to get a house. You have another one if you're trying to get a car. Then they're supposed to come out with a new FICO scoring system every 5 years, right? So it's supposed to help lenders figure out if you're credit worthy or not. Again, I'm just giving you the condensed version of what this means. So the FICO 10 and the FICO 10T was actually released during the pandemic. The problem I had with that was there was no warning. I saw that they were testing it then. And it wasn't the full 5 years and they were testing it. So it was affecting people negatively. And I'll explain why. Again, I did a whole video on it, but go check it out. But it was affecting people negatively, the few people that they were testing it on. But after that, it went away and then it came back months later with the whole formal announcement. Hey, this is the FICO 10, this is the FICO 10T, and this is what it's supposed to do. Now, what makes the FICO 10T so special, unique, is the fact that this is the only scoring model that has two versions of itself. FICO 10T, T stands for trending, meaning trending data. So they want to see with this particular model how you have been paying your bills and paying on your credit cards, paying on your debt within the past 24 months. So they're going back into time. With that being said, if you had poor credit 2 years ago, now your credit's amazing, it doesn't matter. It's going to go back into time, and your credit score is going to be based on your overall within the past 24 months. It's horrible. It's horrible. Now, because the majority of my clients are trying to purchase a home or refinance or something like that, I was concerned. I knew it was the beginning of the end. Like I always said, even 2 years prior to the pandemic, but I felt comfortable knowing that it wasn't going to hurt my clients or my potential clients, because back then Fannie Mae and Fannie Mae. I gotta correct my thing. Fannie Mae and Freddie Mac stated that they would not adopt this new method, but they would leave it up to the local lenders, like whoever you use, they'll leave it up to them to decide if they're going to use it or not. So if you don't know, if you're trying to purchase a home, when your lender is running your credit report, they're looking at a FICO Classic or a FICO 3, a FICO 4, a FICO 5, like an older version of FICO. That scoring model, and we can get into it just so you have a visual and a clear understanding. I'm going to show you a whole bunch of stuff. I'm just giving you disclaimers now, so when I'm talking, you have an idea of what I'm talking about as I'm giving you the visuals. But anyway, they look at that lower scoring model. That lower scoring model is way less forgiving than, let's say, a FICO 8, FICO 9. Okay, FICO, do we have a FICO 6? Well, I'll show you the chart. Okay. Now, that was completely different. And what they look at and what determines whether or not you're going to be approved is what is on your FICO older models, your 2s, your classics, and so on and so forth. It was really strict. It's really strict. But the newer ones, the FICO 8, the FICO 9, those are more of like your consumer credit scores. So like if you're trying to get like a store card or a Walmart card, a gas card, it's easier to get approved for. Long story. But what Fannie Mae and Freddie Mac were basically saying is, we're not going to go by the FICO 10 and 10T. Don't worry about it, which is great, because if you look at your FICO 10 and your FICO 10T, a lot of people have a 100 point score drop in their credit score. So if you're trying to purchase a home and they're looking at FICO 10 and FICO 10T, you're out of luck. You know what I'm saying? You thought you were good, but you're not, right? So we're going to get into that, because now what they're saying is, at the end of 2025, the final quarter of 2025, they will be implementing and enforcing the FICO 10 and 10T. At the current moment, just so I'm claro, before anybody comes at my neck about anything, this is on hold right now. We're going to discuss that as well. I do not trust the government like that. Y'all know my story, especially if you follow me. If you don't, go check out my podcast, Coast to Coast Credit. Link is in the description. Look at my past videos or whatever. I don't trust them when they say, oh, this is on hold, this is temporary, this is that, because we as the consumer get the short end of the stick. But anyway, I digress. Let's move on. So let's get straight into it. I love showing y'all facts. So I'm going to show y'all the facts. Now, I Googled it, so there's no confusion, and we're going to go through everything step by step, right? So I put in what's the latest update on the Fannie Mae and Freddie Mac credit score transition as of February 2025, because just to date this video, or I'm sorry, this recording, this live, whatever, it's February 25th, 2025, right now, right here we at right now. Okay, so it says here, as of February 2025, the transition to new credit score models for Fannie Mae and Freddie Mac is expected to occur in the fourth quarter. This transition will include new credit score model and reduction in the number of credit reports required. So I love the fact that it gives you links to everything. So we're going to click on the links. I'm not going to read the articles in its entirety. Okay. I will leave the links in the description so that you guys can use that as a reference, or you can type in what I typed in you'll get the same results. But let's click on, first of all, this link here and the link icon. And I'm going to click on this particular article. I actually saw it already. Actually, it's right here. So I'll share this screen with you. So this is the link right here. Now, this is dated January 16, 2025. Currently, we're in February 2025. So it was a little over a month ago. All right. Not much has changed as far as the decision making is concerned. But either way, it's going to happen at the end of this year. So the final quarter. So we have some time, but just so you know what you're in for. So the title says Fannie Mae, Freddie Mac credit score transition has been put on hold. And it says a planned implementation of the new credit score requirements for single family loans acquired by Fannie Mae and Freddie has been paused in response to industry feedback. We're going to discuss about this so-called alleged industry feedback as well, which I get, it makes sense, but still, I think they're going to release it regardless of what feedback they have. The Federal Housing Financing Agency has announced this today. So that's the FHFA. If you're seeing that acronym, that's why I see it's right. FHFA. Now, under the policy, Fannie Mae and Freddie would replace the current FICO credit score model with the FICO 10T and the VantageScore 4.0. So just so you are aware that, again, we're going to talk about this. We're going to talk about this again. All right. FICO 10 in FICO 10T is technically the latest version of the scoring models that we're using, or businesses are supposed to use, or companies are supposed to use, or what have you. Right. So when you go into a store, let's say Walmart, Costco again, and you're trying to get a card, they're supposed to look at the most latest version. A lot of businesses don't catch up to that. They don't know that we're on the FICO 10 and the FICO 10T right now. So a lot of companies are actually on FICO 8, FICO 9, which is fine. Companies catch up when they catch up. It usually takes several years for them to catch up. That's why it's 5 years every time before they change the update the new scoring model. Okay. But it's at the discretion of the debtor or the company or the organization or the business, what have you, to choose when they want to become current and use the current model or older model. It's up to them. They have that right, which is why we're on this topic. So the fact that this article is stating that they're going to use the current model, even though businesses are on 8 and 9 still, the current model is actually the FICO 10 and the FICO 10T. Okay. All right. So I'm gonna minimize myself. Minimize myself. All right. So now the Vantage score is just I told you guys before, Vantage is FICO's competitor. So what they do is they purchase your FICO score and they do their own calculations. I could talk to y'all about that again. I know it's been a very long time since I talked about it. So I need to do that every so often, because a lot of y'all come to me like, oh, I know my credit score, but you're not looking at what the lender is looking at. You're looking at Vantage, and your lender doesn't look at Vantage. They look at FICO. All right, but I digress. But the Vantage 4.0 is equivalent to a FICO 10T. So they also go back into time within the past 24 months when they're looking at your credit. So these credit score models in transition from required 3 credit reports to 2 for single family loans. I will repeat that because I know I messed that up by interjecting my opinion or explaining something. But anyway, it says under this policy, they're now going to replace the FICO credit score model with a FICO 10T and the VantageScore 4.0. I don't know one lender that uses a Vantage 4.0. So if you're a lender and you use a 4.0 for your clients, let me know, because that's wild. That's wild to me. I'm not used to it, but whatever. The credit score models in transition from the requiring 3 credit reports to 2 single family loans. Again, I'm not a lender. I will actually bring that up to a lender to discuss it a little further and about that. These changes were originally set to take place in the fourth quarter of this year, meaning 2025. However, in a notice today, the FHFA said it has pushed back the implementation to be a to be determined date. Again, I don't trust that. I don't trust that. Whatever. Because, like I said, during the pandemic, they sprung the FICO 10T on people, and I've seen their credit score drop 100 points. That I don't trust it, but whatever. I'm just giving y'all facts for now. And that's the thing. I'm giving y'all facts. I'll say my opinion throughout. So it says we remain committed to working closely with all industry stakeholders to ensure the market has time to plan for and understand the transition. That's the issue. We're going to talk about it a little later, but that's basically the issue and why this is apparently there's a hold. Now, I heard somewhere that they were saying the reason why there's a hold because there was some scammy stuff going on with internally with Fannie Mae and Freddie. I don't work there. I don't know. And unless we find out together today, that's just hearsay. Okay. That's hearsay until we find proof. But right now, regardless of whether there's internal issues with Fannie and Freddie or not, the point of the matter is it's on hold. The point of the matter is this is a major change that is going to negatively impact the consumer drastically. Okay. And we need to focus on that and we need solutions on that. Other than that, let's stop talking about rumors if you're not going to prove it. Right. All right. I digress. It says the American Bankers Association and 4 associations last year requested FHFA make public the analysis that drove the changes, saying greater transparency was needed to ensure a smooth transition. ABA had previously raised concern with the FHFA about the public commitment process for the initial rule and urged the agency to provide more time for stakeholder feedback. Other than that, this is the end of the article. So I get that. That's one article. Okay. We got that. We understand. Hopefully you understand. If you guys have any questions, concerns, leave it in the chat. Let's talk about it. Okay. Leave your opinion. If you're having experiences about this already, let me know. I'm also going to go into, I've done this before with y'all, but I'm going to go into somebody's credit report and show you live, like what the differences are in your credit score and how it drops or goes up or down, per credit model. And this, again, is why it's important because the FICO 10 and FICO 10T, especially the FICO 10T, is known to drop a score a couple points, several points into the 100 points. Okay. Now let's get back to another link here. Let me share my screen again. Now I want to go through these articles again, like I stated, because this is very important, right? We got to get the facts. And okay, now some of just so you know, these changes were discussed in 2024. Okay, so some of the articles I'm going to show you are going to be 2024. The article I just showed you today was the most recent one, and it was as of a little over a month ago. Okay, so it says the number of credit reports required will be reduced from 3 to 2 single family loans. We just talked about that. That's what I'm going to have a lender discuss. Okay. It does say the transition will occur in 2 phases. So let's look at that article where they're stressing that or they're emphasizing that. So now again, it's talking about the delay of the new credit scoring model. And here it is right here. Okay, here it is right up in here. Now, if you take a look at it, it's a hefty article. Again, I will share the link with y'all. Oh, it's not too bad. It's not too bad. It's talking about the author at the bottom, which is great. So it's still a decent read. Okay, for those that don't like reading, you got to read. You have to read in order to stay informed. You can't just rely on other people. But what it's saying here is, I'm going to try to skim through it. They're talking about the new changes. Following extensive stakeholder engagement and input, the FHFA is aligning the implementation date of the buy merge credit reporting requirement with the transition from the FICO Classic. I'm sorry, I said it backwards. The classic FICO credit score model. So again, it's just exactly what I told you. They're switching it from classic, or they're going to switch it from classic to FICO 10 and FICO 10T. I should just say FICO 10T because they're not saying both. So to be clear, FICO 10T. So they're going to go back 24 months. And the VantageScore 4.0. So the VantageScore 4.0 credit score models for use by the enterprises to replace the FICO Classic model. The announcement also included a plan to transition from a 3 credit report requirement to 2 reports known as buy merge credit reporting for single family loans acquired by Fannie Mae and Freddie Mac. Now, basically, this is for residential loans. I know I had to tell y'all are very smart, and I appreciate that. But just so there is absolute clarity, again, I'm not a mortgage lender, but this, they're making clear this is for residential loans, not like commercial loans or anything like that. Okay, loans for residential, there's loans for commercial. And if you want some loans and you need your credit fixed, let me know so you get the loans for the commercial. But you don't utilize the same avenue for commercial loans and residential loans. That much I do know. Okay. All right, let's get back to it. Now, October 2022. Okay, so they've been talking about this for some time. And the I can't read letters. FHFA announced the validation and approval of the change. Okay, so again, this was during the pandemic times. So there's been talks of it, and you guys need to put your little tinfoil hats on and understand why this is happening. We'll get into it in a minute. It says in March 2023, FHFA said it expected to initiate the credit reporting change in the first quarter of the year, but then that change was delayed after an industry feedback. Then March 2023, the plan also stated that the new credit score models will occur over 2 phases, with full incorporation occurring by the fourth quarter of 2025. Now, both transitions are expected to occur the fourth quarter of next year. So this is a lending issue. Okay. This is a lending issue. Let's just say right here, synchronizing buy merge credit reporting with the implementation of the new credit score model requirements will reduce complexity for market participants, which is a key objective of our transition efforts. All right. So I'm going to stop sharing right there. Here's why. So again, I'm not in the mortgage industry, but I know enough when they're saying we're going to stop using classic, we're going to use FICO 10T and Vantage 4.0. That's my arena. I'm going to put a pause for the cause. Bear with me, y'all. And I'm going to show you what a FICO 10 and a FICO 10C can do for your credit. Wait a minute. You know what? I'm going to show you a credit score chart first. Hold on. That's what I'll do. I'll show you a credit score chart. Hold on. I used to have it on hand back in the day, and now I don't have it. And the one I had, it would give you a full breakdown of all of the credit. Okay, I'm sorry. I'm trying to look for it and tell you to say of all the credit scores and what it does. and what they're for and who utilized. Like it was a full detail breakdown. Hold on, let me see if I can find that for you. Credit score chart with chart with all of the credit models. Okay. In the meantime, while you guys are waiting for me, I need you to. I found it, by the way. I need you guys to like, share, comment, subscribe. Don't be up in here just looking without clicking. All right. But anyway, so I found it for you. So mine was actually blue. So this one's green, which is cool. This and then this score. This chart is actually missing FICO 10T, but don't worry about it. This is pretty new. Actually, let me try one more time. Types of FICO credit scores. Okay. Okay. All right. Now this one, they are used for. Okay. Everybody has their own. Nobody. This is so weird. Let me see. Now this one, I've never seen this one before. Oh, now this one is good. There's a chart that I saw maybe once or twice where it will show you all the FICO credit scores, but it will show you the interest rates. Like if your credit score is this, then your interest rate will be this. And it was super banging. If I could find that for y'all, I'll do a separate like video on that for you. But in the meantime, let me use this one. So let me share my screen with y'all one more time. We're gonna be flip flopping. You guys will be okay. All right. So all right, boom, boom. Now this is the chart that I had before. Again, mine was blue. And I'm gonna zoom it in for you guys so you can see it clearly. All right, so let me see what this looks like for y'all. Yep, okay, so you can see it clearly. And this is actually on my past video. So, all right, so these are the FICO credit scores. So you guys are used to, I don't know what you're used to. Some people, you guys don't know that there's a FICO 8. You don't know there's a FICO 10. You don't know there's a classic. You don't know any of this. And I'm sorry if this looks confusing, but you have to understand why you get approved for some things and why you get denied for some things, right? So when you guys come to me and you're like, yeah, I know my credit score and I got approved for this, so I don't know why I didn't get approved for a mortgage. This is why. Everyone looks at something different. So this right here, this is your FICO score. What they're missing is a FICO 9. I don't see that on this chart. So this is probably, they have a FICO 10, but they don't have a FICO 9. But the FICO 9 is what is a lot of companies are starting to use, but a lot of companies are still stuck at FICO score 8. So it's used with all three credit reporting agencies. But if you're trying to purchase a car, they use a different FICO scoring system. So they use a FICO 8. I don't know what lender uses a auto score 2 because that is super old, because car dealerships, they want you to hurry up and get approved. So the older scoring models are just more difficult to get approvals for. And again, I'll give y'all a visual in a second. But yeah, so then you got this, then you got the 4, you got bank cards. So when you're trying to get a credit card, some of them are looking at a bank card 2, again 3. I don't know who is doing that. You should be able to look it up or ask them, but a lot of times your customer service rep doesn't know, like the underwriter might know. But look at what they're looking. They're not looking at the same thing. So your lender, they're missing mortgage, so they should have that here. Oh, duh, it's right here. So your mortgage application. So if you're trying to apply for a mortgage, see here, they're looking at your FICO 2. They're looking at your FICO 5, 4. Now they're going to look at your FICO 10T, which they don't have on this chart. They have it on my other chart. They don't have it on this chart. Okay. So that is concerning because, as you can see, out of all of the loan applications, if you get a mortgage, they're looking at the oldest one. So the other people, like the other lenders, the other banks, if you're trying to get a credit card, they can look at your FICO 2 all the way to your FICO 8, FICO 9, FICO 10. Okay. Mortgage has always, no matter what scoring models they've been on, everybody else has been updated on, they don't care. Fannie Mae and Freddie Mac have always been stuck on classic 2, 5, and 4. Now they're going to be on 10T, which is not a good look. So I'm going to stop sharing that. And real quick, let me show you a live version. Okay. Let me show you a live version of what will happen to your credit score when you go through the different scoring models. So bear with me because I have to protect my clients' information. I use this client a lot on their FICO. Hold on, I think we're good to go. All right. There's certain information, like when you log in, it'll boom, show their information. I just can't stand that. All right. So this is it. Let me share it. And this is again to give you, okay, hold on. Let me share my screen. This is to give you a visual. All right, boom. Now, I tell y'all all the time, stop just looking at your Credit Karma. Don't just look at your Smart Credit. I am partnered with Smart Credit, and that is your VantageScore. But when you're trying to purchase a home, don't look at the Vantage because they're not looking at Vantage. Unless you're dealing with a lender that is looking at your VantageScore, I would actually ask them and say, hey, what scoring model are you looking at? What are you looking at? You know what I'm saying? Are you looking at FICO or Vantage? I promise you they're going to be saying they look at FICO. Nobody's paying attention to Vantage. Vantage is cheaper, but it's just an entirely different credit scoring system that they haven't caught up to yet. They're slowly catching up to it, but not in the mortgage world. Okay. So let me zoom in and let me show you. If you can see, this is her score. Okay. This is her FICO score. Oops. Sorry, y'all. This is her FICO score currently. Okay. Now, this is, if you look closely, this is her FICO score 8. You have to pay attention. This is the score 8. And this is when it was last updated, February 1st, February 17th, February 12th. So she is current for the most part. Credit reports update every 30 days. Now, if you see here, she's basically okay, right? Like it from where she started, she's okay, but we're not going to focus on the score today. We're going to focus on the different loan types. And in case you're wondering if you want to know what makes up your credit score, this is it here. Okay. You got the payment history, the amount of debt, amount of new credit, length of history, credit mix. I'll do another updated video on that. Now, what I love about my FICO is it should be very easy for you guys to understand. You do not have to have a huge extensive educational background when it comes to credit and finances. It's not that deep. As you can see, it says mortgages and has a picture of a house. Auto loans, car, credit cards, card, and new version, which is the FICO 10 and the FICO 10C. We are at score 8. This is her consumer score. This is where most companies and businesses that are going to look to run your credit report, they're going to run a credit score of FICO 8. Okay. So let's go into auto loans with her current score. Now, do you see how her score dropped? It dropped drastically. So in case you weren't paying attention, she at a FICO score 8, she has a 596, 566, 610, right? Somewhat of a lopsided credit score. Now, if she were to go in, actually, it needs to be updated. Let's update her and see where she's at with it. Okay, hold on for just a second. All right, so her credit report is updating. And let's see if there's any changes. All right. Oh, took me too far back. Okay, so this is her. There we go. So yeah, it's basically the same. Okay. So now it is her credit report is updated as of today. All right, it did get a little better. It did get a little better. So okay. So if you look at where her score is 596, she's almost at a 600. She's over a 600 with Experian, and then TransUnion. TransUnion is always funny. So it's always like the crappy one. But if she were to walk in and try to get a car right now, you see how her score did improve, which is great. Okay. But it's still poor. Is noticeably different than what we just saw, which is our consumer score. Now, if we go under her FICO auto score 9, it changes again. If we go under her FICO auto score 5, 4, and 2, it changes yet again. This is a concern because you need to know the lender. You need to ask the lender, what model are you looking at? So if she were to get a credit card, this is what her banking score is. Totally different, right? If they go under her score 9, it just drops. FICO score bank card. This is actually a very new scoring model. A FICO bank card score. That's new. That's fairly new. And then, like I said, the older the cards, the FICO score or the model is, the less forgiving it is. And then they have a 3, which doesn't exist for Equifax and TransUnion. But you see the difference. Now, since we're talking about Freddie and Fannie, let's go straight into the mortgage scores. Now, when you go to apply for a mortgage, I'm talking about the here and now. I'm not talking about the upcoming changes, the soon to be changes, and all that. I'm talking about right now. If you walk up to a lender and say, hey, I need a mortgage, and they check your credit report, this is what they're going to check. They're going to look at your FICO 5, 4, 2, in certain cases, classic. This would be her credit score to them if she walked right in and said, hey, this is what I need. I need a credit, I need a loan, and they're going to pull this. Okay. Now you got to ask your lender, what is an acceptable credit score? Because I think you can get loans with a 550, a 560. I don't know. Every lender is different. So ask them. But now we got to worry about the new version, the FICO 10T, right? Look at her FICO 10 score. This is her FICO 10. This is recently released. You see how her score dropped. But they're talking about a FICO 10T. Look at the changes. They're just changing. And you could say, okay, it's not by much, but that's her credit score. That's her credit report. What about yours? This is where it keeps changing so drastically that if you don't know better, you don't know how to ask the right questions, you don't know what to do, you don't know how to fix it, you don't know what to say, what lenders to go to, what your options are. This is an issue. This is a major concern. And again, since there's so many drastic changes happening within our government, within the administration right now we got to worry about Fannie and Freddie up in these streets. I promise you I will stay on top of it. But again, because this is a shared industry issue, both credit and lending, I will have experts in the mortgage industry to get on and talk. Okay, and let us know what's really good. I actually have one of my most trusted lenders looking into it. Whenever she's ready, she'll hop on and go into it with you guys. Okay, answer all y'all questions. If you have questions in the meantime, leave it in the comments because she will definitely look at it and give you answers. And I got you. I got you. I got you. Now let's continue on with well, I gotta find that chart with the interest rate. That is crazy. I gotta show you the chart with the interest rate. But anyway, let's go back into, let me get out of her thing right now. And again, I'm just not sharing my screen because I'm not trying to show her information like that. Okay, so we're gonna go back to Google and go down the list of questions again, or the points, because that was really important. And we're going to go over the articles once again, because that was very important. So I'm going to share my screen with y'all. Okay, boom, boom. Now we're back at it. So the transition is going to happen in two parts. We'll see. The transition is delayed due to the industry feedback. We are going to sort of talk about that again. These articles are kind of just like, it's 2024, but it's kind of like it's talking about the future, which is now currently our present. So we get that. That's why I'm not clicking on every single article. The FHFA has been holding stakeholder forums to give feedback on the changes. Let's see. Yeah, it's taking you to the same article. Credit score models and report initiative. Yeah, it's the same article over and over again for the most part. So just to quickly talk about, and then I'm gonna wrap this up. Just to quickly talk about the shareholder feedback and then me giving my opinion on the solution. Because like I said before, I love giving y'all, telling y'all what's going on in these streets, but I also have to give you a solution to the problem. So the shareholders are basically stating that they're not given enough time to transition from what they've been doing all these years into FICO 10T. And that's pretty important. It's a fair argument. However, the FICO 10 and the 10T have been out, like I said, since the pandemic, not towards the end of the pandemic, like literally the middle of the pandemic. They just flashed it. You know what I'm saying? Like certain people got it, right? So they've known for years. We've been out of the allegedly out of this pandemic for what, 2 years now, a year and some change. Okay, roughly, and that's not enough time. Y'all knew this was coming. You guys were in the talks about it 2 years ago. 2022, what's that, 3 years ago, technically, or going on 3 years? That was during pandemic time. You should have had plenty of time to figure out what you were going to do. Now, I can say in their defense, low key, that when the FICO 10T was officially released, I did look into it, and Fannie Mae and Freddie Mac stated they were not going to enforce the change. They said they would change at some point, but it wasn't like a rush. That's what I got out of it. Like it's happening, but we're not rushing to make these changes. We're still going to stick to classic 2, 5, and 4, 2, 4, and 5, whatever. But if the local lenders want to use a FICO 10 and 10T, it's at their discretion. That's what they said when the 10 and the 10T was released. Now we're here, people. Now we're here. And now they're talking about, well, we're not just going to use the 10, we're going to use the 10T, which is a problem because it goes back 2 years. It goes back 24 months. So now this goes into me and my opinion as a credit expert, why I feel that this is a major problem, why I know that this is a major problem. So I have people that have been repeat customers. I have people that have been fixing their credit on their own for the past 2 years, and they decided to hire me because they wanted better results or they don't have time to do it anymore, whatever the case may be, right? I fix your credit, and now since all the craziness is going on with the FCRA, I mean, it's not the FCRA, the CFPB and the government or whatever, I'm getting amazing results. You know what I'm saying? Not like I wasn't already getting amazing results because I am who I am. I was getting results. Excuse my hair, it's all over the place. But it's just the fact that because of the craziness, I'm getting a whole lot of deletions much faster. And I'm going to show y'all proof too. I've been doing that on my Facebook page. Be sure to go on my Facebook page here. Here's the information. Be sure to do that. It's in the description. But I'm showing results or whatever. But the thing is, I don't know. I think you guys, what we need to do is for you to fix your credit as soon as you can. Because for those that have been doing it themselves and now they get me to do it and they're getting results, my real question is, does it even matter now that this is about to kick in? Does it matter when you try to purchase a home because now these rules are kicking in? Does it matter now if they're going back 2 years? Because if 2 years ago you were at a 400 and today you're at a 700, what's the point of applying? If you're using the FICO 10T, we're all poor on that. We've all failed. We're all declined. And I personally think that is the intention. I'm going to say it again. Check out my other lives during the pandemic, which I told you was amazing for my industry. It was an amazing time. You know, every day I was blessed to wake up and live to see another day. And that meant I could continue to conduct my business accordingly, right? My business was thriving. Okay. Now I feel that we're kind of in that realm financially again as far as nationally, but I'm going to fix your credit. I can fix your credit. But if you're trying to get a home and your lender is going back in time, then what can we do? I can't go back in time and fix it. So what can you do? You have to fix your credit now. You have to pick the right lender. You have to ask the lender. You have to know what you're talking about. That's why I showed you. I'm not showing you things for fun. I'm not showing you just so you can be like, oh, okay, all right, what next? I'm showing you so you know how to talk to these lenders when you're applying for stuff. What credit model are you using? Are you using FICO or using Vantage? Are you using a FICO 8 or using a FICO 10? Are you using a FICO Classic? You have to know these things because if you don't know, then you could be taken advantage of. And since we have no more protection at the moment because the CFPB is on hold, you're now exposed to predatory lending. Right? So you have to know what you're talking about. So hopefully this video helped and hopefully, your questions will be answered soon. Ask questions, contact me, schedule a free consultation with me, get your credit fixed. I'm not just saying this because I'm a credit expert. I'm saying it because that's the reality. When you get your credit fixed, what we're going to do differently now from the pandemic is we're going to get our credit so high. We're going to maintain that high credit score because I promise you, the next step is that there will not be any credit repair. See how I told you the FICO 10C? I can't go back in time and fix it. So that dead credit repair right there is dead. It's done. I can't go back in 2 years into the future, go back to the future. I can't go in the past and fix your credit score. Mm-mm. You have to now accept it. So again, I mean, time is on your side. Hurry up and get your credit repaired yesterday. Do it yourself. Get me to do it. Get your mama to do it. Whoever you trust in. Understand it's a service. It takes a process. Okay. So don't get pissed like, oh, I signed up today. It magically should be gone next month. No, that's not how it works. Okay. But you have to do this now. You have to understand what's going on. Even those people that are trying to refinance their home, this falls with you too. This affects you as well. Okay. So if you have any questions, let me know. Schedule a free consultation with me. Follow me on Facebook. Check me out on my podcast. And I want to say thank you guys for listening all around the world because that's crazy. That still blows my mind. I'm getting more and more followers on the other side of the pond, which is bananas. But anyway, hopefully this was informative. I'm going to do more videos. I'm probably going to go more into detail about the credit scores, the charts, the interest rates, depending on what credit score you have, because I think now more than ever, especially with all these changes, that's really necessary, right? It's super duper necessary. But anything else you want me to talk about, let me know. I'm still going to keep my eye out on the CFPB, but I do have an alternative method that I notice nobody is talking about. I don't know if I should keep it to myself or share it, but I'll probably share it because it's like, people will figure it out at some point. But anyway, I'm gonna let y'all go. Hopefully you learned and hopefully you catch on and get your credit fixed. Stop playing. Stop playing with your life. I can't care more about your credit than you do. All right. In the meantime, I wish you guys the best of luck on your credit repair journey.